Yeah, I think the next 2 years or 3 years look very constructive. I think basically we have this window where the next 6 months, there's a lot of variables. So I think that basically next 6 months for Bitcoin, very unclear. I can make the case for retesting the lows, or I can make the case for, not going below 25,000. But that I think that the 2 year or the 3 year case is very, very strong. I have high conviction that basically we'll probably have another positive liquidity cycle in that environment.
Renowned financial analyst Lyn Alden, founder of Lyn Alden Investment Management, has updated her price predictions for the world's largest cryptocurrency. She considers the convergence of macro and economic events negatively impacting the cryptocurrency market and U.S. investments. Mixed signals from the Federal Reserve regarding future rate increases and stronger than expected economic data, including increased consumer spending and core PC inflation, contribute to the volatility. Additionally, the Treasury Department's drawdown in the Treasury General Account and subsequent replenishment after raising the debt ceiling pose challenges. Alden forecasts a rocky period for the U.S. economy in the next few months, impacting Bitcoin prices, possibly dropping to the lower $20,000 range. However, she predicts a significant recovery for Bitcoin within 2 to 3 years, envisioning its return to six-figure values.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So I think on the surface, the narrative is pretty clear, where basically it's, the banking system's unstable and people say, well, I can self-custody money with Bitcoin. I don't have to worry about counterparty risk. I think that's part of it, but I think probably the bigger move is basically due to markets repricing their forward expectations for how aggressively the Fed can hike rates. So we saw, for example, that 2-year treasuries stopped increasing. We saw that, as you pointed out, the market's pricing in cuts by the end of the year. And a lot of that changed pretty rapidly, beginning with the banking crisis. And when you have a softening of forward expectations for how hawkish the Fed can be, then it gives a bid towards kind of anti-dollar trades, scarce assets like gold and Bitcoin. And so I think the biggest move that we've seen probably in this thing is not necessarily the narrative itself, but the kind of the structural market implications of rates. So I think as the Fed shifts from, tighten money as tight as possible, control inflation as much as possible, and instead kind of balance that between financial stability, that's what's given Bitcoin and other scarce assets a chance to catch a bid. I think the challenge is that when we go back to those liquidity questions I talked about earlier, like if the Treasury tries to refill its a cash account really quickly while the Fed's still doing QT, it's probably not going to be good for Bitcoin for, say, a multi-week period, most likely. But when you do get some sort of pivot, either the Fed ends its QT program, or has to launch some sort of new liquidity program, or the Treasury has to take some other action, I would be a buyer of that capitulation if we were to get one. Bitcoin formed a very big bottom in late 2018, early 2019, and then it grinded significantly higher, but then it kind of retested that bottom very briefly during the March 2020 sell-off. And so it didn't hit like lower lows, but it did kind of briefly go back and plumb those depths. And the difference was that it didn't stay there for many months. It just kind of had this like big flick down, and you had the liquidity response, and a number of weeks later it was already back up to well above that bottom. And I think you could see a similar thing where you get kind of a brief problem that brings it down maybe lower than we expect, but I don't think it would stay in that lower band anywhere near as long as it did in this.
What is the price range of that lower band that you consider to be the bottom?
I think I wouldn't be surprised to see it touch the lower 20s again if we get that specific scenario of a liquidity crisis from trying to refill the Treasury General account. There are scenarios that I think could push it to the upper teens yet again. But I think that would be it probably spend less time there than it did in this prior bottom. And instead, if they actually front run this, if the Fed ends quantitative tightening before you get the Treasury pull up, or if the Treasury does proactively kind of focus on issuing T-bills or increasing their Treasury account slower, then I think you're much less likely to retest those lows.
Lyn Alden has skillfully presented two possible scenarios for short-term investors and traders. If the Treasury and Federal Reserve were to push the economy into a severe liquidity crisis, which may have already started with a regional banking crisis and declining commercial real estate prices, Bitcoin prices could potentially drop by another 10 or 15%. On the other hand, there is a chance for Bitcoin to avoid such a fate if there is an unexpected pivot from the Federal Reserve or a similar event that boosts market sentiment. Returning to Alden's interview, she delves further into her short and long-term price predictions for Bitcoin.
the next 2 years or 3 years look very constructive. I think basically we have this window where the next 6 months, there's a lot of variables that I think could throw us off. I think Stanley Druckenmiller said it best. He's like, I can make the case for deflation, or I can make the case for 8% inflation. And I think he's touching on the same kind of uncertainties I'm touching on here, which is that there's very key decision points that a handful of individuals can make, and that can determine pretty big swings in what happens. So I think that basically next 6 months for Bitcoin, very unclear. I can make the case for retesting the lows, or I can make the case for, not going below 25,000. But that I think that the 2-year or the 3-year case is very, very strong. I have high conviction that basically we'll probably have another positive liquidity cycle in that environment. And right now the valuation is very attractive, compared to its longer term, say, moving averages. I also think if you look at Bitcoin holding behavior, generally one thing you see in bull markets is that long-term holders begin selling some of their Bitcoin because they're up 5x, 10x, all this new money's rushing in, and they're reducing their positions. When you have bear markets, you generally instead see long-term holders are not selling, that they're buying more, and you start to get a very large percentage of Bitcoin that haven't moved in a year or more. And right now we're very tight in that metric. Basically, we have a lot of indicators kind of either pointing that the bottom's in, or that the bottom at most is likely to be retested. And so I'm very constructive with, say, a 2 to 3 year view. So I might push it out to late 2025 to give myself more room, but I do think there's a good chance of seeing 6 figures in this next, call it 3-year cycle. That's not for sure. I wouldn't go levered long and assume that to be the case. I wouldn't build a business specifically that's going to happen, but if I would say my base case is I would expect to see 6 figures over, say, the next 3 years. I think we start with 100,000 or 120,000 and see if we get to that before making higher conviction, higher price targets from there. I think the biggest signal is that the Fed has to begin changing its hawkishness, despite the fact that they haven't met their inflation targets. So for example, if you go back to 2019 during the repo rate spike, in September of 2019, the repo market had all sorts of problems, and the Fed had to abruptly end their quantitative tightening and shift to a form of quantitative easing, and they had trouble explaining why they had to do it. And it was in large part because you had T-bills crowding out bank reserves. And if you see a similar environment where they have to kind of pivot prematurely, and yet that happens in an above target inflation environment, I think that would be a sign that they've kind of lost control of inflation, and that that would be a very strong signal to want to buy other assets, either hard assets or generally anything that would benefit from a weaker dollar at that point.
Similar to the majority, Lyn Alden's short-term predictions for Bitcoin are rather pessimistic, considering the current state of the U.S. economy. However, in the long term, this renowned financial analyst envisions Bitcoin potentially reaching a value above $100,000, possibly within the range of $100,000 to $120,000. Such a substantial increase of 361% from current prices would solidify Bitcoin's position as a safe haven asset and attract a broader range of investors, both retail and institutional. What are your thoughts on Lyn Alden's assessment of the current state of the U.S. economy and her predictions for Bitcoin? Feel free to share your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.